This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. Let's have a look at Bitcoin. We're going to break it down from a short-term time frame all the way up to the long-term time frames, looking at resistances basically, because it doesn't look particularly bad, I would say, for looking for another massive dump or anything like that. I'm not really seeing that at this very moment in time. Doesn't seem particularly interested in dumping to brand new lows yet. But remember, we talked about the cup and handle formation, the inverted cup and handle over this last couple of days. That's still in play. So we'll just invert the chart so you can see all of this. I mean, this is basically the deal. We have got our cup and handle. There's your cup, there's your handle, and basically if we start to move back up again and break this area, that's the cup and handle formation complete. Invert the chart back to normal again. This basically means dumperoo. A dumperoo party down to significantly new lows. So we mark these areas off by either this area of support, basically 19,000, and 18,000. So we're talking increments almost of $1,000 each time, whether it's up or down. We're in the center of this range right now, and the next level above us is going to be 21,700, and if that breaks, then we've invalidated the cup and handle formation, which is actually pretty bullish. So 4 hourlies, we've got 23,000, just where the 200 exponential and simple moving averages. That's fine, but if we move it back to a daily, it doesn't look too bad. It doesn't look too bad at all. And again, yeah, the top side of that range breaks. The next level for us here is around 24 to 25,000. Well, I would say 24,000-ish. So the daily looks quite good, momentum still building, nothing particularly to worry about. The thing is, I don't expect huge big moves up or down really for the moment. I think if anything, we've just got to shift our gears up incrementally to move up a bit. And look, the size of the Bollinger Bands here are quite tight. You know, we've gone through this process before. So you know, a breakdown here, big extended bubbly Bollinger Band there, small tight range. You know, finding ourselves from the bottom to the top, and then breaking down, big fat bubbly range. Now we're doing the same thing again. So when Bollinger Bands pinch and they get tighter, it means that volatility is brewing. So obviously it's easier in this kind of environment to get the big massive moves down because everyone's still super bearish. But I do favor the concept still of the everything bounce. I talked about that 3 weeks ago, almost 4 weeks ago now. So we're in the start really of when this should start to pick up its paces. And you know, if we think about what the everything bounce, you know, in simple terms is about, it's about commodity prices coming down, affecting the next inflation data. And you know, so far, you know, I was saying that oil I think is topped around here. We came down to the tune of 21%, currently down 18%. That's fine, and the Dixie is still going strong, to be honest with you. And again, we can look at this all we like. Bearish divergence all the way up on the 4 hourly, no big deal. Bearish divergence all the way up on the daily, no big deal. And weekly bearish divergence all the way up, no big deal. Why is that happening? Well, you can't fight the Fed, that's basically why. So let's have a quick nosy at the Nasdaq. So this is the entry point that I was talking about when I was talking about the everything bounce. 8% up on the Nasdaq so far. You know, it was a very unpopular video I made at the time. You know, I got banned from Reddit groups for even talking about it. You know, they started to see these big moves. Obviously, I positioned myself in lots of stocks and indexes around here, talking about the everything bounce, and it started to happen. So I went back to Reddit to say, it's happening, and I've been banned. They'd rather ban me than listen. What is all that about? Right, so let's just think about what's going on then for crypto. So I'm more into Bitcoin than altcoins at this very moment. The alt season that we took part in about 3 or 4 weeks ago, you know, whether you want to call it that, it was still a 50% move. So you know, getting 50% more Bitcoin than you put in is a decent trade over about a 10-day period. That was done. It might still happen again. We can have a quick look at the dominance chart, but I'm a little scared to commit more Bitcoin into altcoins at this particular level. And the reason is that the Bollinger Band center for the Bitcoin dominance. So your 20 weekly. I know this is very messy indeed. So let's just get a simple Bollinger Band out for you. The 20 weekly is like a major thing for the Bitcoin dominance. So this is where we're obviously trending. We've always liked the Bollinger Band center, gauging support up here, resistance here, breakout, up, support, breakdown. But since the alt season really picked up a gear, you know, and we completely smashed the altcoin market. You know, we were loving it. This is what, you know, this is what all crypto is about, really. Waiting for these sort of epic opportunities. The 20 weekly, or the Bollinger Band center on your weekly, became resistance. Bang, 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 all the way down. Resistance, bang, all the way down. We had a small period of time where we got above it, and then bang, all the way down. Now what we're doing is, it's neither here nor there. You know, because it's a chart based on market caps, it's not as neat as, like, let's just say a price chart, really. Now we are technically looking like we want to get rejected from it, and there is a possibility that altcoins still continue to outperform Bitcoin for the most part, and that is true. But the closer we get to this level down here, again, it's a Bollinger Band bottom plus a historical level of support and resistance that goes back a long time. You know, you don't want to be in too many altcoins around that period. So if we do get continuation, great. But for me, I'm not going to sell any more Bitcoin to altcoins. That was done over here, and we made 50% gains, you know, over a very short period of time. So that was done. So I'm a little hesitant to move back into altcoins from a Bitcoin position. But look, I hold a lot of altcoins. You know, I've been buying them, some of them down at these low levels, and obviously my trading bots are all altcoins as well. So let's have a think about what this is doing on a weekly, and then we'll just move back in time. So the weekly, we've got major areas of resistance. 200 simple moving average, you know, the be all and end all of Bitcoin's future in many people's eyes. I said that this is a bit of a red herring event, really, coming down to this level, and the reason for that is that previously in previous bull markets I looked at this 50 exponential moving average, right? So this is a 50, this is a 200, this is a simple, this is an exponential. It doesn't really matter. But what I'm saying is, you know, in previous bull markets we never broke down below here at all. In the previous bull markets, and actually if we look at this in this bull market, we've broken down on it every year. So the bull market began here 2019, broke down from it here for a period of what, 5-6 weeks. Once again over here 2020, 2021 break down below it, 2022 broke down below it. So that is a change of Bitcoin's behavior in general. It had never done that in the past. This bull market, it did it every year. It has done it every year. So now that we've broken down below the 200 simple moving average, you know, people are saying that, you know, that's really bad. And again, you know, if you see that happen on any stocks or anything, really, it's not a good look. But I'm willing to give it the benefit of the doubt that actually this is a bit of a non-event kind of thing, and it doesn't really particularly mean a great deal. And being below it, although, you know, from a trader's perspective, is not a place to be. We've been doing these strange things on this bull market, different to how we did it before, and it's kind of always turned around just fine anyway. So I would put less weight on this simple moving average, although being above it would be good. I think as easy as we came through it like this, I think we could probably quite easily come straight above it. The main thing I would focus on would be just the general formation here. I'll get rid of this itchy cloud because it's not really giving us anything. The general formation, which is a descending triangle. So we could come up towards the top of this, which is something that I actually think is quite likely throughout this month. With this everything bounce, which I think is likely to happen. The only thing that's going to really cause a problem is the earnings report for stocks, giving them a sort of a bit of a bad outlook, and obviously getting sell-offs as a result of that. And we know that the correlation is quite high. Has been since 2020 at least anyway. It's almost been pretty much an amplifier of stocks and the major indexes, so the correlation really basically kicked into another level really around here. But you know, moving back up to the top side of this descending triangle is not unlikely, or at least the previous summer lows, so 29,000. We've got moving averages of more significance, I would say, outside of this 20 weekly, which showed no relevance at all, which is the 7 simple, and that currently comes in around 24,000 on a weekly. So I would be putting the next major move, if Bitcoin breaks out of that invalidation cup and handle formation, to about 24,000. And at the moment, yeah, it looks quite good on the daily. I mean, it's kind of a non-thing on the weekly, really. But unfortunately for the day, for the 4 hourly, there is a bit of bearish divergence forming. It's not particularly strong, but it is present. It is present. It wouldn't take much to invalidate that. This is only your second drive, and all we'd need really is an RSI to poke its head above this previous high over here, and it would be invalidated as well. So we are looking at invalidations for continuation. And the way I see the markets at the moment, with the everything bounce, it doesn't seem unlikely. So the main thing really would be for Bitcoin to break above 21,800, and with significant momentum to show that RSI closure and cancel out the bearish divergence from this drive, and that could easily take us up to that 7 simple on the weekly, which would be a main area of resistance, because we've seen how relevant that's been on the way down. It would be a relevant area to consider, you know, maybe taking some chips off the table, especially if you're, you know, doing derivatives, futures. We've got a big rejection over here and a big rejection over here, so it's a big deal. It's also, you know, if you're super bullish or super bearish and the use of moving averages, the 7 simple is like the last stop for bullish momentum, so, or bearish momentum. So we've been floating away from it for a long time. Normally what I would say is, as soon as this starts to become a relevant moving average, we're nearing the end of either a bull trend or a bear trend. So again, you know, we're at the mercy of an overall trading environment because of recession being the buzzword at the moment, and what recession might do to stocks and everything like that. So it is a strange environment to try and trade in. It's obviously a bear market as well, so it makes it definitely harder for spot traders and whatnot. But overall, just like I said, you know, if we follow the 4-year cycle, this is your top. We'll be looking for a bottom to be formed more or less at the end of the apex. And so whether we move up and then back down again into these lower ranges, either way, on a time basis, on a cycle basis, you know, we are almost 2/3 of the way through, and so if you want to sit on the sidelines and just monitor the price, you know, we might quite easily get higher before we go lower, and then finally break out and reaccumulate, ready for the next bull market to begin. And just to put it into context for everybody, if you've not been around since the beginning of the bull market, you know, things can turn around quite fast, but for the most part, this is a Bitcoin chart. This is how it moves, right? It starts low, you go high, you go down massively, you go up again, you go down massively, you go up again, you go down. It's choppy, and it's always choppy. And within amongst all of this is the altcoin situation, where you go from extreme highs to extreme lows all the time. So crypto isn't unlike anything else, really. It's volatile, it's choppy, it's not straight up all the way to the moon. You do have to be patient with it. You do have to believe that it's going to work, and I obviously do, because I've seen it work. You know, I live it, basically. But don't be under the illusion that you'll be able to buy something and you will get rich immediately. That's generally not the best way to think about this. The best way for a trader is to trade it based on risk to reward, and while trading in a descending triangle in a bear market in this environment is a bit of a risky business. You know, you're more likely to get hurt than you are to win. But I do favour some upside, generally because of the way that the everything bounce appears to be materialising the way I said it was about 3 or 4 weeks ago. Like I say, my stocks are up, my indexes are up, oil, wheat, all commodities are down. This is something that I was telling everybody, making a big fuss about 3 or 4 weeks ago, much to the disgust of people on Reddit who have consequently banned me. Madness. It's just madness. Anyway, that's pretty much all I got for you today. It's going to meander, and we're looking to incrementally take out areas above us, hopefully within in increments of $1,000. And as soon as we invalidate that cup in handle formation, which would be at the top of the Bollinger Band, and also this horizontal support stroke resistance, I should say, which is, you know, arguably about between 21,800. But if we can close above 22, brilliant. I would favour a move up towards 24, which is the weekly 7 simple moving average. It does look good. I'm not going to say it doesn't look good. It does look good, but it's not the best setup you've ever seen in the world. You know, the grand on the big picture, you know, it's still a very scary chart to want to try and trade. But you know, I'm in favour of it, at least pushing up to the top of this range and then see where we go from there. Anyway, watch out for the bearish divergence. We'll have to keep an eye on that. 3 drives of that would almost certainly play out to a bit of a dump party. But for the moment, we are still trending up very slowly despite the divergence, and our main target would be to try and close above 22,000 for what could be continuation up to the 24 and then maybe 28, 29, 30. That would be the target, I would say, the top target for this month. I'd be very surprised if we could surpass that. Anyway, thanks for watching, guys. Hope you have a nice day. Take it easy.